What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 28th of 2018. Well, folks, it's time for a daily update here on the DataDash channel, and today we have a wide range of topics to discuss here on the update. First and foremost, as always, we're going to be spending a good amount of time taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we have some key headlines to discuss. There's been some issues with the recent governance model of EOS ever since its mainnet launch, so we're going to be talking about that today and how Dan Liermer and other prominent figures are submitting proposals to these issues. Along with that as well, we'll be talking about how a recent judge in China has declared that blockchain can be used in the sense of providing evidence in certain cases, a variety of other important headlines in cryptocurrencies and cool things to discuss, as well as our analysis on traditional markets and commodities. So we've got a wide range of things to talk about. Let's not push it off any longer and dive right into the update. So generally speaking, with market valuations and market trends at the moment, there is not much to speak of outside of a few oddballs in the market that are providing double-digit gains or some sell-side action. Really, for the most part, we can see that the market is relatively flat, especially for cryptocurrencies. 2 to 3% price action isn't too much in the sense of the crypto space. So because of that, we've been holding relatively steady. There's not too much trends. This has obviously been due to the fact that we're not seeing any change in liquidity, both to the buy side or sell side. And with this, we're currently holding at $6,000 for Bitcoin, which we're going to be talking about later on in the video. So going on here to take a look generally at valuations, we're generally holding where we were back in April. Again, nothing too scary, nothing that we haven't seen before. Valuations are not only relatively steady towards the previous levels, but also volume is hanging relatively at the same area as well. Barely double-digit billion-dollar volume in the market, so we're not really having any liquid trading going on. A lot of it is market making. A lot of it is just simply stagnant trading, no new entry of money into the markets. So because of that, we've been seeing obviously as well that market dominance for Bitcoin here. So I'll make sure you guys can see the chart here. I want to show that obviously we've been seeing an uptick in Bitcoin dominance, and if we were to continue depleting down below 6,000, we will obviously test this level back up here around 45%. But I genuinely don't think we're going to see that. We'll be talking about that later on when I look at Bitcoin. Along with that as well, you cannot deny in this market, guys, that at the moment, a lot of altcoins are at very, very low levels comparative not only to Bitcoin, but to their USD levels as well. So very, very important thing to note. There's a lot of cheap altcoins across the board. Today, I'm not going to be spending too much time diving into altcoins specifically because there's not too much trading going on at the moment, not too much of a trend. So I'm going to go ahead and skip that in the sense of time because we've got a lot of different things to talk about. But we will be spending some good time talking about Bitcoin and potentially the next uptrend in markets. But real quick, I want to let you guys know, again, I don't like to spam things too often on the channel, but I want to let you guys know I'm going to be attending a conference in Lithuania, the Pillar UnConference. It's hosted by the Pillar project, but it's not solely just about Pillar. It's about all types of things blockchain and crypto, and it's completely free for entry, which I really liked. I don't like a lot of the conferences that charge average people $500 or $1,000 for a ticket. It's not so much behind the whole message of blockchain. So I really like what Pillar's doing here. I'm going to be speaking on finding the next big ICO, talking about all types of different things. I'll be having a masterclass and a speech that I'm doing. But also, if you guys use the referral code DataDash, it'll lock you guys in for a meetup with me completely free of charge. So can't wait to see you guys. Hopefully you can make it. If you're in Europe, all you have to pay for is your flight and your hotel for the event, but it's completely free for entry. So going on here, let's go ahead and spend some time to talk about the two major players here. We're going to be talking about Bitcoin and Ethereum here. The first thing I want to talk about is generally Bitcoin and the fact that we've been generally holding about around $6,000. We've been through the accumulation phase where price has been able to hold above this level, and we only got a slight dip the other day. Actually, well, to be fair, we've tested below 6,000 around 3 times, but every single time we've been able to close above 6,000, which is a very, very key sign that we're holding this as support. Again, sometimes you get what's known as fake outs, guys, that someone was telling me the other day that, oh, Nick, the price had dropped below 6,000. You said it wouldn't drop below there. I mean, it could very well drop there temporarily, but at the moment, we haven't gotten a close below there. Every time we have a slight dip below 6,000, we get buyers coming in, which is proving that this has an opportunity to become support. And we've been seeing that as we accumulate to the side. This is a good thing to have where you can move price to the side, as we saw back here. Again, sometimes you can have sharp rebounds. It's very rare that you can get an uptrend after a sharp rebound, after dead cat bounces. Excuse me, in that case, usually engulfing candles. But in this case, I think we're repeating what we saw back here in April. But I want to spend some time more to talk about the longer term trend and why I think we could be seeing in the short term some positive trend and price action, but possibly as well something that could lead towards more of a long-term bear market as well. And again, you guys know I'm very neutral. I want to show both sides here, but I usually tend to turn to historical price action when I talk about this kind of stuff. So let's go ahead and take a look at probably the most relevant price action we have in the short history of Bitcoin. You know, what's really different when you're going from traditional markets to Bitcoin is Bitcoin and cryptocurrencies are a very new market. You don't have much historical trends to work with. And really, outside of traditional markets where you have multiple market cycles, in this case, we really only have one serious one to work with, which was the run-up in 2013 and the correction in 2014 and 15. So what I'm generally seeing here as a correlation, again, not exact correlation, but relative correlations, is the sense that we obviously had a parabolic run-up, but we were able to hold support multiple times at a key even level of $400 for Bitcoin. And from there, we got a nice short-term rally, going up more than 50%, going towards almost $700. So in this case, I think that we're going to see a repeat of history here, where we can charge up towards the 200-day, try to get past it, and possibly continue higher. And we might be able to hopefully have a continued uptrend and possibly go towards our higher levels of $40,000 or $50,000 by 2019 or early 2019 if we can get a Bitcoin ETF. But at the moment, again, we still haven't had much talks outside of the VanEck ETF proposal. So outside of the longer term trend that would help sustain it and help keep growing liquidity into the market and getting people excited for crypto, what could cause this little rebound to the upside? Well, sometimes we can see that markets obviously just move up, but I think there is going to be a nice little short-term catalyst, and it's going to be another crypto player in the market that's going to lead Bitcoin and other cryptocurrencies to start trending upward and also see more liquidity enter into the market. And that, my friends, is the second market leader, Ethereum. Now, I'm not going to spend too much time rambling on about it. You guys know I've been talking about this for quite some time. I think we're going to see Ethereum futures contracts, and if we do get that, you know, it's a perfect time for it because we're holding, it looks like we're getting close to double bottoming again and testing this level at $400, which again was previous resistance in the past and has been made a support not only over here as we had the continued rally throughout December and January, but along with that as well has been support here back in April. So I think we're going to come down, test that level around $400, and at these levels, if we can hold it, I have no doubt that we're probably going to see Ethereum futures contracts over the next, say, month or two, in that sense, or at least begin talks relatively soon, because after the recent announcement that Ethereum is not a security, I'm assured that the CBOE as well as the CME are rushing to get Ethereum futures contracts on the gate, because again, they did it with Bitcoin futures, or at least they're going to start talks of it, like I was stating before. So in that case, I'm keeping an eye on Ethereum here. I think Ethereum, if it were to get futures contracts, could easily rally back up to around $800, its previous high here in May, and potentially to the big even of $1,000. But I don't really see it going back to its December highs unless we get a full altcoin cycle or a full bull cycle in altcoins and cryptocurrencies. So either way, still really good potential play here for Ethereum. But for the most part, I really want to focus in on Bitcoin, that we might see a repetition where we come up to the 200-day in this general price range over the next few weeks and don't have enough momentum to sustain a full long-term uptrend. We'll have to see though. So that's the general thing I'm keeping an eye on in TA. Most altcoins at the moment, guys, there's not much trading you can do. Most of them are generally following Bitcoin. They found pretty high correlation of it, I think, in an article recently. There's been a few outballs. I know Monero has kind of gone out of play, and there's obviously always going to be a spontaneous altcoin that moons in one day and then usually corrects afterwards. But in this sense, we're not seeing any viable trend at the moment. And because of that, we want to focus on where we can spot the signs when that trend is going to come. We want to focus on the big players, Bitcoin and Ethereum, which are going to give us those signs very early on. So moving on here outside of the TA side of things, let's jump into the headlines. There's been a recent question of a supposed do-over or a supposed type of reapproach to EOS's governance model. There's been a lot of concern, seeing as it is the 5th largest cryptocurrency in a well-formed blockchain protocol, competing supposedly with the likes of Ethereum. But at the same time, even through all these claims and all the community excitement behind EOS, there's been a serious issue with its governance model. They've literally been, in a sense, on damage control in some sense. And I don't mean to speak negatively on EOS in that sense. I think EOS has a lot of things going for it, but it is taking a very stark approach a very different approach compared to that of other blockchain protocols because of the fact that it's implementing a full-scale governance model outside of miners. It's running off of delegated proof of stake, and from that, we're having these, these individuals have a very high level of power. But the thing we have to talk about here has to do with something that has been generally rising up over the past week, where there's been a freezing of funds on users' accounts, where there have been individuals on a high level within the EOS governance model going out, in some cases unanimously freezing accounts. Now, we don't really know all the details of this because in many cases, as we'll go through here in the article, there were cases where they didn't have to actually explain why they were freezing the funds. They were actually going to explain at a later date. So there has been some conflict with this, and a lot of people have been calling for a new call to the EOS constitution because EOS originally had rules that allowed arbitrators in this sense to run in the sense of being able to freeze funds. But people are feeling that this is probably not an ability that they should have, and in fact their only ability should generally be around running and operating the code and generally running under the same similar consensus mechanism of confirming transactions, not simply rejecting or blocking transactions. And in this case, they only have really the real creative authority here is within the code of EOS, that they want to have the best protocol that scales best, that provides the best features. And this is what Dan Larimer has generally been proposing. You can read the quote down here. I think it really hits the nail on the head, that an arbitrator can render an opinion, and the parties can either comply or not, and the arbitrator can indicate whether a party is in good standing. That is it. An arbitrator should not ever have the power to take assets unless said assets were previously placed in control of the arbitrator. So they're originally in control of the arbitrator who's trying to freeze the funds. I don't agree with placing all assets under control of producers. So in this case, he's basically going out and stating that, it was probably a flaw to allow a select 21 delegates through delegated proof of stake to determine whether or not, you can freeze transactions, you can remove assets from someone's wallet. This is generally the kind of concerns that we have with things like Ripple, for example, that is very centralized in the sense of where it's allowed to add new funds, remove funds, freeze transactions. It's just like the traditional banking system, and many people are worried about that. And there's also just been a lot of noise and conflict between the block producers. So some people are curious as to whether or not EOS is going to get through this. I have high confidence in Dan Larimer. Again, EOS isn't my favorite project in the space, but I've been keeping up with it for a while. I know a lot of people in the EOS community. They have a very vibrant community, not only competing to be block producers, but just people helping out in EOS all across the world. So it is good to see that. But I want to see some of these big issues that have been flourishing up with EOS resolved before I get any more confident or buy any more EOS in that sense. There's a lot of centralized power at the moment, and with that comes a lot of trust. So just want to get that out of the way. Love to hear what you guys think down in the comments down below about it, but there's not too much to say until we get an official change on the Constitution like Dan is proposing. Going on here to the second headline, there is a recent judge in China that has declared that blockchain could be used as legal evidence in certain cases. So in this case, generally speaking, it's not too complex to see what they're saying here. They're saying, generally speaking, because you have immutable ledgers, in this case, if you have a good consensus algorithm, which is something I'm going to press here in just a moment, that blockchains can be very good in the sense of proving records of transactions of practically any sort, or ownership within those transactions of any given digital asset or physical asset in that matter. And the reason why is because there's digital signatures involved when you make these transactions. Again, you have your private key that you use to sign the transaction, whereas people can facilitate transactions between one another and distribute ownership of certain things. And this is why people talk about title ownership on blockchain and all these things. And whether or not you believe it's a possible application, blockchains can provide that sense of transparency. And this is a really good quote here. And this is something I want to talk about here. Really the last big point I want to talk about in the article without going too deep. I love how the judge quoted this. The court thinks that it should maintain an open and neutral stance on using blockchain to analyze individual cases. We can't exclude it just because it's a complex technology, nor can we lower the standard just because it is tamper-proof and traceable. In this case, the usage of a third-party blockchain platform that is reliable without conflict of interests provides the legal ground for providing the intellectual infringement. Now, if you look through the article, they also talked about two major blockchains, things like Bitcoin or Factom, which has been a project for quite some time dealing with generally more towards legal documentation. And I think that that is a perfect quote right here, a very good middle ground statement, because many people would say that, why isn't blockchain being used extensively for these things? And at the same time, some people would say, no, I don't want to mess with it. It's a new technology. We don't know if we can trust this yet. We've obviously seen that the concept of a solid blockchain and consensus mechanism pairing is a great way to secure information, whether that is proof of work or whatever consensus mechanism you believe is good or bad. We know, however, though, that Bitcoin's ledger has been immutable because of its consensus mechanism. And from that, so long as you have a good consensus mechanism built on your blockchain, it can serve as a good tool in determining different types of transaction information and current holdings on different types of assets. But if you do not have a good consensus mechanism, it is not going to be a solid tool. Blockchain itself, without a solid consensus mechanism, is very similar to that of a centralized database. So again, I think it was a very interesting point that they brought up Bitcoin and Factom's blockchain in the sense of the hashing power behind it. I think it's much, much better than most blockchains out there to deal with this type of legitimate conflict in this sense, making sure that people can't double spend or attack the network in any regards with very high level information. I've got to go ahead and jump into this, guys. I'm not going to talk too much on it, but recently the well-known site Pornhub has added Tron, Zencash, and other crypto payment options on the website. All I have to say to this is, what happened to that partnership? What happened to Verge? So yeah, this is something I saw as a general worry. It wasn't one of my biggest concerns. I thought the partnership wasn't really going to work that well, but obviously this well-known site that some people love to visit has taken more crypto options now. And they talked about how Zencash obviously is another privacy coin, but we were not able to get comments from Tron, obviously, as being a payment option on the site. So we'll leave that be. Anyways, going on, Japan's Line messaging app, as we all know, it's a very large messaging app in Japan, has looked towards launching its own cryptocurrency exchange. Now, I would say that this is something to be, if I didn't know the details on it and I just saw the headline here, I would be jumping out of my seat and excited to see what would come out of Line, because Line has major traction with Japanese users. And we all know in Japan, cryptocurrencies tend to do quite well in Japan with the likes of Bitcoin and Monacoin and all these different cryptocurrencies. But we have to spend some time to address some fundamental issues at the moment. And that is the fact that Line is not going to be supported, supposedly, for US and Japanese residents, which kind of goes counter towards the excitement here. Now, I don't know if that's just in the sense of fiat pairings. They've said that they're not dealing with fiat pairings. They're dealing with token, coins and tokens specifically. So no actual dollar transactions to avoid the regulatory environment in that. However, I'm very, very curious to see if they're going to eventually open up to US and Japanese investors, because I think that's what you really need here. If you can promote this exchange, or at least advertise it to some degree, or provide benefits for Line users to launch on this exchange rather than, exchanges like Binance, there could be some serious traction with this. So I'm going to keep my eye open on it. Nothing too much to be worried about at the moment, seeing as they've got that barrier right in the way. And that's been due to the fact that they're worried about Japanese regulations that have recently come from the FSA. So going on here, something interesting. I got two things I wanted to share from Reddit. In the sense of Bitcoin transactions, someone spotted a almost $300 million transaction on the Bitcoin network, and all they had to pay was 4 cents. Thought I'd show that. One of my favorite abilities of sending transactions with cryptocurrencies, because you don't have a bank that's taking a percentage cut, of like maybe 1 or 2% doing Forex transactions. You have a fair flat rate no matter how much Bitcoin you're sending, whether you're sending $10 worth of Bitcoin or $400 million worth of Bitcoin. Doesn't matter. You always pay that nice low fee, or pay a slightly higher fee of about 10 cents if you want to, get prioritized on the network. Going on here as well, another thing on Reddit I saw, and again, this is why I'm such a big fan of NANO, guys. It was trending on r/cryptocurrency. NANO was ranked the fastest payment system amongst all cryptocurrencies, and all it requires is one simple confirmation on the Binance network. We all know it runs off the block lattice. You only need one confirmation. In that sense, 3 seconds to send transactions on and off from the exchange. Now, I recently tested out the NANO mobile wallet, absolutely loved it. ran very fast, worked great, and I'm really excited. I had to do it on someone else's phone because my mobile phone is not updated to the highest iOS, and you need that for the mobile wallet. So that's probably the one downside, but they've got iOS and Android support. So it's really great to see this because I think Nano could actually really be used for mainstream commerce. It's a perfect example of how crypto is finally breaking past a lot of the inefficiencies of traditional cryptocurrencies like Bitcoin and etc. So lots of interesting stuff going on in crypto land. But I want to spend some time to talk about traditional markets here, and then we'll dive into how I'm keeping my eye on a play for commodities at the moment. Generally speaking, the other day we had obviously some serious breakdown in price action here as we take it here to the hourly, where it looks like we're starting to roll over and potentially see a further correction in markets. At the moment right now, we're holding quite nicely on the open, a little bump up around 0.4% here. But for the past few days, we've actually seen a correction in a lot of the FANG stocks, a lot of the big players in the market. Apple has been taking a dive from its highs here around $200. We've been seeing, for example, Netflix as well, finally getting some steady correction in price action, looking a little bit shaky from that distance that it's currently holding from the 200-day moving average. We've seen from Facebook as well. Facebook is starting to topple out a little bit higher from the it had a little bit slightly higher levels from what we saw back in the past before all the Facebook drama, but is looking quite overextended. And Google as well is starting to triple top over here. This is not a good sign. If you guys know anything about TA, you know triple tops are a bad sign, and you know triple bottoms are a good sign. And in this case, it's looking like we're going to at least test down to the 200-day moving average. And from there, I think we're going to possibly break it and have what we saw back in 2015. I mean, we have to understand how much the FANG stocks right now are playing a role. Oh, actually, we didn't even take a look at Amazon. I apologize. I'm kind of sporadic here with trying to pick what I want to go through. But I mean, it's generally the same signs here across the board, everyone. We're very extended from, on our major market players, the FANG stocks, away from, the 200-day moving average. And they're making up a massive part of the NASDAQ. But we can also see it's not just the NASDAQ. If you start seeing some of the other indexes across the board, the S&P 500 starting to come back down, test towards the 200-day. The Dow Jones, very important thing to note, guys, the Dow Jones has broken below the 200-day moving average. This is a very worrying sign because, again, it's one of the major three indexes. And if this continues to deplete well below the 200-day, if we get, for example, below here on the ETF around $235, that's going to be a far enough gap where the other indexes are going to be weighted down. They're going to follow the Dow Jones, in my opinion. But again, you're going to possibly, I think, see more than anything, it come back down to these levels it's seen in the past. And if you get a breakdown below that, that's my warning sign for markets. I think that would really be the tipping point where we at least see a 2015 styled correction where we had a flash crash in price, where we break through the floor here that we held for so long. I remember back trading this. It was not a fun time, but it was definitely interesting to watch. But anyways, yeah, I think you'd want to watch to see if the Dow Jones is going to break below this level. If it does, it's not only extended further away from the 200-day, but it's going to drag the market with it. I mean, the last index I want to take a look at here in markets, guys, is the Russell 2000. The Russell 2000 is excessively overextended. We've almost, from the peak here, we almost doubled from back here in 2016. So this is definitely quite extended at the moment, and I think that you at least need to come back down, as we've seen every time. Generally speaking, when we get a bounce off the 200-day, we come back to correct and touch and make contact with the 200-day. I think we're going to see that again, which means that we've got a good 5 to 10% decline at least in all major indexes. All right, so that's enough generally looking at traditional markets. Let's go ahead and take a look a little bit at commodities at the moment. So gold at the moment is currently still in the flag that we've been looking at, the general ascending triangle in this sense, which is obviously a bullish pattern. And with this, we're looking to see gold hopefully hold support here around this level, around 118 for GLD. Again, it might be a little bit different if you go look at the actual gold price. But for the most part, if we can hold here, I think this is going to be one of the last opportunities we see gold. Excuse me. Getting the hiccups. I think this is going to be one of the last few moments we see gold holding at these low levels before we start moving higher. It's going to be rare that you find commodities cheap at these levels because they're all showing signs of breaking out here. You have gold still holding in this long-term ascending triangle. And we can take a look at silver here, which is still building within the wedge. It's coiling even closer. And as we take a look at the weekly, we can even see a clear picture of this as well. Our price is getting more and more narrow. Volume has started to slightly pick up here. There's been some more active trading. You can see it in uranium as well. We've been talking about this. I don't think too many people cover uranium, but I think it's, again, another commodity that has been well oversold and is ready to have an extended breakout. And we're looking to possibly come down again, like we said with gold, like we said with silver, and a variety of other commodities, to get that last chance at a low before we really start breaking out here, because there's not too much range within these wedges or these triangles anymore, folks, in the technical patterns. It's looking to signal for a breakout. Uranium holding flat on the 200-day moving average. Take a look at silver. Silver bottomed out on the 200-day and is starting to look like it's flattening out and looking for an upside trend. Gold as well has obviously started to trend upwards ever since back here in 2016. So there's a lot of signs across the board that are saying that commodities are signaling for higher levels. Again, always refer back to that chart, guys. You want to play the big swings in both crypto markets and traditional markets. Remember that chart I showed you guys of it was the Goldman Sachs, I think it was the Goldman Sachs S&P index versus commodities over a prolonged period of time. We are back towards a 1-to-1 ratio of commodities and equities. That has not happened in 50 years. That means that commodities are oversold, or equities are dramatically overbought, or that both are at play at the moment. So keep an eye on commodities. It's still genuinely the only play I have in the sense that I'm interested in the sense of traditional markets. But again, you got to do your own research and decide for yourself. But I'd like to hear down below what you guys think generally at the moment about commodities markets, traditional markets, as well as all the other stuff we talked about in relation to crypto markets. Where do you think Bitcoin's heading, and where do you think do you think we could possibly see Ethereum futures contracts as well? Anyways, guys, that's it for the video. Thank you all so much for watching. I hope you all have a wonderful rest of the day, and I will see you guys in the next video. Stay tuned.